So thanks for joining this route. I'm sure it will be exciting, and we have a lot of very interesting aspects to tackle around Mika. But before we go into it, I would say let's that we take a round of introductions for the beginning. So maybe Carola, if you want to start.
Yeah, thank you. Happy to start. Yeah, I'm Carola Rathke, partner at YPOG law firm. So I'm the dumb lawyer here in the group, but advising the industry for many years already. So about eight years, starting with the real crypto world over to pilot regime, distributed ledger technology, and now the missing link was always the currency, and therefore, of course, also doing a deep dive in the currency part. And I'm very happy to join this great panel here on this topic.
Yeah, likewise, super happy to be back in Frankfurt. Patrick Hansen, Director for EU Strategy and Policy at Circle. So led most of our Mika-related launch and expansion here over the last 2.5 years. For Circle, Circle is, I think, known to most of you, largest regulated stablecoin issuer in the world, both in the US for USDC, the US dollar, and for URC, our Euro stablecoin over here in the EU, in the Euro area. So very much looking forward to the panel.
Yeah, thank you very much for being here. Alex Höptner, I'm CEO of AllUnity, company owned by DWS, Galaxy and Flow Traders, and we want to maybe speed up to following Circle. So we applied for an e-money license in Germany under BaFin to list an e-money token and then bring out the digital euro as stablecoin here in Europe.
Hi, I'm Brett Reeves. I'm from BitGo. We're probably best known as a custodian and wallet provider, but I guess in the last 12 months or so, have branched out to prime brokerage, OTC trading, electronic trading, and as of yesterday, stablecoins as a service with World Liberty's launch of US $1.
Yeah, great. So great to have you all here today. Unfortunately, Sven is not with us today. He's here. Unfortunately, became sick just from yesterday. So yeah, he says hi and apologies, but he really tried everything to be here. Didn't work out, but also without Sven, I think we do have a very very interesting lineup and also knowledge insights here as part of this panel, because we have one stablecoin that is fully live for years. We have one stablecoin that soon will be launched, then trading experts and also legal experts. So we will deep dive on Mika. As said, we heard some introduction on Mika already, so that's it's here. So it provides certainty for the EU. But maybe before we go into the details of Mika, maybe Patrick, to you, can you maybe kind of set the scene a little in terms of where do we today stay with Euro stablecoins, right? So what use cases are they used for? How large is the market? I guess you're a main player, so maybe you can elaborate on that.
Yeah, happy to start, and then I guess others can add. So overall, relatively speaking, the Euro stablecoin market is still tiny. Clearly, it's like 0.3, 0.4% maybe of total stablecoin circulation. So tiny overall, but growing. That's at least encouraging. We're seeing for URC that it has tripled in circulation since we launched it officially under Mika last year. Encouraging growth. In terms of use cases, I think the starting, like the on-ramp is always crypto markets. And we see that clearly for URC as well. What we have seen now is that it's being used, for example, in DeFi markets. There are FX pools in Uniswap, Aerodrome on Base. So it's starting to be used and added as liquidity, euro-denominated liquidity in DeFi. You have lending pools, Aave and others. At the same time, on the centralized side, we're seeing more and more exchanges, brokers adding URC as a trading pair, as an asset that you can convert and trade to. That's the crypto side, and I think that's the most straightforward and obvious. And then hopefully, and that's what I guess we're all building towards, at the end of the day, the use case for Euro stablecoins will be the use cases for the Euro, right? So it will be used for quote unquote real world payments, merchant payments, capital markets, especially when those get tokenized and will be built increasingly on blockchain. So these are the use cases that we're hopeful to expand towards, but it's a marathon, not a sprint. It will take a little bit of time.
Yes, and I mean, it's very ambitious use cases which are used daily, probably in a million, billion volume, right? But let's see where far we go. Maybe Alex, also on the use case side, on what you're focusing on with AllUnity, which kind of use cases are you particularly, let's say, targeting, focusing on?
I think there's, as Patrick said, there's a development going on the customer or on the use case side. The existing use case naturally is the crypto side, and there most likely it's not the spot exchanges, it's the derivatives exchanges, so BTC, perpetual swaps or options, and they're mainly driven by Asian exchanges. And when you look at the success of a stablecoin, it's mostly defined by volumes on the classical, CoinGeckos and CoinDesks of the world. But the real use case, as Patrick said, for me is payment services for real economy corporates. It's collateral management for corporates and banks. It's finality of payment. That's the big use cases. The regulatory framework for these use cases is already existing, so we don't have to wait for anything there. But everybody's now working with it. MiCA is relatively new still, so all the projects, let's say, reborn after they all started in 17 and 18 and then found out that the legal framework is still missing. So since mid of last year when you announced, and then now the projects are, let's say, waking up again. You need the regulated stablecoins where we now see the first real ones, let's say, on the market, because ultimately it is security and stability that is driven by the stablecoins, and there's maybe just you guys really solidly out there yet. And so what you see is that maybe not already 25, but then 26, you will see a lot of adoption for payment services and treasury, especially treasury management of classical corporates.
I think it, yeah.
Yeah, that would have been exactly my point. So coming from the really crypto world, then going over to the DLT pilot regime world where you build kind of trading and settlement systems on chain, the big issue was always the fiat side. And so I think, yes, it's still tiny, but there are people, and when we talk about trading and settlement systems, we also talk about retail clients that could trade on these kind of trading venues, and then they don't want to trade all the time maybe in the USD, but then they request the euro. And so I think for these kind of use cases, we talk about tiny use cases yet, but they are growing. And I think there the EuroC is important. And as you just mentioned, the next big use cases is on the treasury side. So treasurers, they have FX topics, but they do have the euro when they have their base in Europe. And therefore, I think we have a lot of conversations going on there, and for their collateral management, it's way easier to have instant possibilities to transfer also currencies from A to B. So we don't talk about 2024, I fully agree with Alex, but I think looking forward, there is an upcoming use case. We see it in the requests from clients that are kind of working on these issues.
Yeah, maybe if I can add to that. Beforehand, even I was promoting and always saying that this big mass market movement is coming from the finance industry. Sorry, I don't believe in that anymore. Yeah, because there's always a losing side. There's a winning side, there's a losing side. Mostly the traders win and the post-trade side loses, and that makes it very difficult to convince the banks to jump into that one. On treasury management of a classical corporate, everybody wins. Getting the money earlier is a win for everybody. You don't have to convince anybody. Yeah? The treasurer can very easily calculate the benefit and then just say, what's the cost of getting that on board or alive against what can I save every day that I get the money early? It's super simple.
So easy pitch to a CFO, so right?
100%, and they're super conservative. So convincing them actually then will convince the corporate, and the corporate will then go to the bank and say, I'm using that stablecoin, you better make sure that I can bank that with you.
And I think, look, we've already seen that with US dollars, right? US dollar is the kind of global kind of reserve currency. It's what everyone kind of banks. And if you look at shipping companies, commodities companies, they've already been using stable coins, US dollar denominated stable coins to move assets around the world. Europe is a little bit behind in that because it's a smaller market than the rest of that world and the need to move dollars around. I think what MiCA has brought forward, the US are now trying to, under the new administration, trying to get through some stablecoin rules and so on and so forth. MiCA has already laid out a blueprint for that. And I think the commerce side of this is the natural place for this to come. Yes, there's things like SEPA and so on, and we're all familiar with that in Europe. But for companies that are banking in Europe, they're not as familiar. They maybe not as used to it. And I think treasuries gaining access to their euros immediately is a huge use case.
I think it's, as always, a different approach by the EU to really focus on the regulatory piece, right? I mean, we all have seen these memes on X, LinkedIn, everywhere, right? Where some countries are just acting or innovating and the EU is regulating, right? Which is often criticized, sometimes also praised. But what is your guys' perspective on the MiCA regulation itself, or on the European approach, let's say, towards stablecoins, right? Which includes MiCA as the regulatory piece, but is probably also way broader.
Yeah, look, it's nice to have regulation. I come from a traditional finance, 20 years in rates and FX prime brokerage, and I joined crypto as 2 years as a crypto prime broker. I think everybody in this space wants regulation. Everyone wants it to succeed. Having that framework is a blessing and a curse. When the rest of the world was operating without, and you see MiCA coming in, yes, it can be a bit of a hindrance, but I think, look, there is a framework towards stablecoins there. I think that is a positive thing. People have something that they can work towards. Obviously, the team at Circle have done a great job with that. And as I say, with dollars being the kind of reserve currency, that's why there's been growth there. There's other use cases as well, you know, in South America, being able to hold US dollars instead of, you know, whether it's Argentinian pesos or whatever it is, because your currency is being devalued. We don't have the same kind of issues in Europe. And so there's an immediate couple of use cases that are taken away from us, the others being the Asian exchanges, which have dominated crypto. Typically, it's all done in US dollars. So the kind of Euro stablecoin adoption is clearly going to be smaller or slower because of the rest of the world use cases. But I think having that framework is a great foundation, and can now kind of move forwards from there.
What do you guys think?
Yeah, I mean, I largely agree. Obviously, I mean, we wouldn't have done it, right, if we hadn't thought it's worth it. So we went through 2.5 years of, you know, regulatory compliance, setting up a business from scratch. So we certainly see the value. And I think, you know, even like speaking with many colleagues around the world at Circle, it's safe to say that the creation of regulatory clarity here is something that all my colleagues envy me about, you know, because we had a clear rule of the road. We knew exactly what we needed to do, and we just followed the path. And so now, and likewise, I think Alex mentioned it, if you're trying to sell a product to a CFO of a corporate, let's say DAX company, you cannot sell something that the counterpart has no idea how to account for it in their books, or how that is treated from a legal and regulatory perspective. So it unlocks all those use cases that we're all working towards. Having said that, I think it's also important to highlight the shortcomings of regulation where they are. And just the empirical data that we see right now is that not many stablecoins are coming under compliance in MiCA, right? If you just open whatever, CoinMarketCap, CoinGecko, or DeFi Llama, etc., you scroll down the top stablecoins by market cap, we're the only ones that are MiCA compliant, and we're proud of it, and we benefit from that. But it's still important, I think, also for Europe to recognize where a stablecoin framework over the next couple of years can potentially be improved in order to attract more of the industry, more of the business, and really achieve those goals that MiCA also has since its inception, to bring the industry under compliance and to foster that innovation and competition here.
Yeah. Okay. No, I totally agree with you. I think we have to differentiate two things. One thing is always having a regulated environment is always something that is good for the industry when it comes to more institutional traditional players. And I don't talk only about financial services, because I fully agree that the more use cases are probably outside of the financial services industry, at least as important for them. But also for them, when you see what are the requirements, because they have to do due diligences on the currencies, etc. For these players, it's important to have a solid regulatory environment. And so this is a big plus. Are we already there where I would like the industry to be when it comes to regulation on the European level? Definitely no. We do see all the shortcomings, and we can discuss them a bit later on, because there are definitely shortcomings. But I would like to kind of emphasize that it's an approach. So it's now on us from the industry side to say, it's great to have regulation, but let's move on. Here are the shortcomings. And so from my experience, actually, with the other regulations, there is openness. So, I mean, we do see the kind of meetings with the European Banking Association. There was one in March, 12th of March, we had the meeting, and there were other meetings on the ESMA level. So they are interested in the exchange, and therefore it's on us now to kind of go that route, what needs to be changed in order to make it work for Europe, maybe in a way better. We come to points later on. But therefore, I would say it's good to have the regulation, but we need to improve it now, but it's on us.
We should treat it as a V1, right? And iterate on.
No, that would have been the same. So it also comes back to the use cases. Yeah. So depending on which use case you look at, the shortcomings are bigger or smaller, and it really will define now, or be defined also, how the US will come up with a stablecoin regime. Yeah, how are the Asian markets reacting to that? Somehow they will have to have a connection to the MiCA infrastructure. And there's, for example, the shortcoming of the interest-bearing side. Yeah, but is this really also be kept in Asia as well in the US? I don't know. So if yes, then there's a shortcoming. If no, there's no shortcoming. And then back to the use cases, the treasurer doesn't care too much at the beginning because his benefit is coming from the other side. And so is it already perfect? No, it can't. But for the speed of implementation and the magnitude of it, it's good that we have one. But as you said, it's version 1, version 2 will change a lot, but it cannot come too early because firstly we have to see how the rest is actually adopting. It doesn't make sense to now come up with 0.2 and then the rest is doing something else and we have quickly a 0.3 or we're falling behind what's happening on the outside of Europe.
And at least from the American side, we might also soon really know where this is heading, right? So obviously, or hopefully, somehow this year, the industry's been waiting very long for this one, right? But if we point now, and we talked about like the benefits, so the certainty, also the speed, and I think it's pretty impressive to have this massive harmonized, regulatory environment now, which I think is pretty unique generally. But let's also, point the finger a little bit to the downside. So, and you said this, Alex, that basically it also depends on the environment, so how others are doing it, which might require some revisions in some direction or not, right? So, it's not in our circle of influence. We don't know yet, right? So we cannot do this. But given what we know today on MiCA, like which are aspects, and maybe, to all of you, that you think should improve, maybe should have been different from the beginning, but we are where we are, should be improved in a V2, let's say, of the MiCA regulation. Yeah, come on.
You've gone through the process, firsthand.
You can speak very, very honestly here,
Well, you want to give it a first shot, or should I?
Go ahead.
Or I mean, I think we all know this, the same points. Just to highlight a few, I think that would benefit from, additional clarity. Let me call it that way, very diplomatically, right? I mean, what the first aspect, an e-money token, so a fiat-backed stablecoin under MiCA is, legally speaking, defined as a crypto asset. At the same time, it's deemed to be e-money, and that gets very quickly into like legal nitty-gritty, and Carola can talk more about that. But that is something that potentially can create duplicative regulatory licensing and compliance requirements, because if an asset is at the same time a crypto asset and e-money, the question always is, for a transfer, for example, or a transaction, is that a crypto asset related transfer, or is that a payment transfer because I'm transferring e-money fiat funds? So this is just one example where I think the industry is calling for more clarity, and EBA and others are looking into it, and then the review of the Payment Services Directive will hopefully bear further clarity. Then there are, I think, the prohibition of interest that is very far-reaching, I think, is one aspect that is often highlighted, where it goes even way further than for traditional e-money, and where questions of technology neutrality arise, where e-money tokens are treated oftentimes very distinctly and differently than e-money, traditional e-money, like your PayPal funds in your PayPal account, for example. This is another one. Like, there are some prudential requirements, over concentration on holding bank deposits compared to high quality liquid assets, short-term government bonds, for example. Like there's a number of points where we believe there's room for improvement. At the same time, I don't want to sound too bearish here, because overall we really believe it's unlocking a huge amount of business. It's harmonizing the rules across the EU. It allows us to scale across 30 countries in the EEA with one regulatory license. So overall, it's net positive for sure, but doesn't mean we can't improve things.
And then, look, that's from your side as the issuer, right? From our side as a custodian, and so regulated by BaFin, which I think is kind of the gold standard in Europe of being regulated. The transfer point is then very relevant. Like, are we dealing with money here, or are we dealing with crypto? And we've had enough battles with my compliance team of, if a client decides to send something from their wallet to another wallet, what is that qualified as? And yeah, to the other point, we have a framework. It's a good starting point, but it needs finessing.
And there's a very practical point coming out of that one. If it is still somehow labeled as a crypto asset, good luck finding a bank to bank you. It has nothing to do with the license in itself, but really, if you define it as a crypto asset, you're all of a sudden holding a crypto asset. And if you become significant, you need to have 4 banks that are tier 1 global banks. Good luck finding these 4 banks to bank you, because you are handling crypto, and that's a different animal. So very practically speaking, there's still some wordings in the law that trigger compliance aspects in necessary, let's say, service blocks that you need to offer your service. And nobody's thinking about that. Yeah, we're thinking about, okay, here's a sentence in the law, and can we open it up? For example, I can have 70% in money market funds. Now the question is, can that be one asset manager? Does that have only one asset manager can have up to 5% of that fund, or is this only 5% in one fund? So there's still some stuff that comes out of these question marks, and there's big question marks, but implications out of definitions in the, let's say, execution. This is really what's hindering us really in the day-to-day work.
Do you think that this, sorry.
No, I just wanted to add the last sentence that actually this shows when you say, or what Brett, you just said, as a custodian, is it a crypto asset? And when I kind of transfer it to someone, do I do a payment service? Do I provide the payment service or not? Luckily, on this side, we have the first kind of comments from the European side. So it shows how they kind of move along with these use cases where they said, well, if it's really just a trading pair where you kind of trade your BTC against some kind of stable coin, that's fine. So I mean a e-money token in this case, that's fine. If you just then kind of deliver it to someone on his or her own self-hosted wallet, it's fine again. So it shows how industry clarifies, but I think there are many, many more clarifications necessary, because really this link between MiCA and PSD, so the Payment Services Directive, and this will be soon Payment Services Directive number 3, this is totally unclear, and also on a way more granular level. So all the clients we are advising, there is every day another upcoming question where we do not know how to answer it actually. So that would be good if there is a big industry movement forward on that